There's a hidden crypto market where assets trade months before they get listed on Coinbase, Kraken, or Robinhood, and at a fraction of the price. Only 0.02% of the world population knows how to access this, and it's called the primary crypto markets. And the mathematical advantage of this hidden crypto market is undeniable. Look at Sol. Primary market listing price, 95 cents. Secondary market listing price, $44.45. The potential gains missed, 4,578%, a 45x. Look at Ray. Primary market, 33 cents. Secondary market, $16.77. Potential gains missed, 49x, 8x. Primary market, 50 cents. Secondary market, $66.63. Potential gains missed, 122x. AXS, even more painful. Primary market, 43 cents. Secondary market, $66.12. Potential gains missed, 152x. My name is Frank Hepworth. I'm the former attorney who used to consult some of the biggest crypto exchanges in the world. I've specialized in crypto for nearly a decade. I've worked with government regulators, consulted crypto VC funds, advised numerous crypto development teams, and I even helped launch the first crypto ETFs on the Toronto Stock Exchange. And last cycle, I 11x my portfolio and generated 7 figures in profit and quit my 6-figure job as a crypto securities attorney. And now I run a crypto consultancy that serves over 1,400 investor clients, helping them grow their portfolios in the primary markets. I'm making this video to tell you that there are 2 crypto markets, and you're probably in the wrong one. Here's what I'm going to explain: what the primary crypto markets are, and the 2 ways you can use the primary crypto markets to grow your wealth. So, what are the primary crypto markets? The primary crypto markets are where crypto assets get listed first. It's where every crypto asset exists and where they are actually created. Secondary crypto markets, on the other hand, are the crypto exchanges like Coinbase, Crypto.com, Robinhood, Kraken, Binance, and all the rest. If you're buying on secondary markets like Coinbase, you're buying late and paying more. But in the primary markets, you'll be able to buy months earlier and at a fraction of the price. The earlier you position yourself and the less that you pay, the more money you'll make. It's as simple as that. And here's the stats. 5,300 new primary market tokens are getting launched daily. 36 million already exist. You're only seeing about 300 of them on Coinbase. And so in other words, you're seeing less than 0.001% of them. And that's a real shame because the primary markets have 2 components that are very appealing to investors like yourself. The first is young crypto assets with 5x, 10x, 50x potential. And the second are yield products that pay passive income on cash. Let's talk about assets first. What most people don't realize is that there is a new category of revenue-generating software businesses being built in the primary markets. You see, crypto at its core is a technological innovation like the internet. People who are new to crypto, they don't really get this, but the more you learn about this, the more you realize how true this actually is. And just like how internet technology spawned a whole new wave of tech companies like Amazon, Apple, Google, the primary crypto markets are spawning a new wave of crypto on-chain companies. Just like how the internet revolutionized and disrupted traditional industries, on-chain businesses are revolutionizing and disrupting traditional industries now as well. And the opportunity you have in the primary markets now is similar to the opportunity you had to buy Amazon back in 1997. And as an example, if you did invest in Amazon in 1997, say $10,000, right now, you'd have had over $216 million. It's an extreme example, but I bet you wish you'd invested back then. I certainly wish my parents had. But chances are you didn't invest in Amazon back then because most people didn't. And that's okay because the primary markets give us the same investing opportunity that the internet did back then in the early 90s and 2000s, because the primary markets are where the crypto equivalent of early stage businesses like Amazon are being built. And they're being built by some of the smartest people on the earth. Engineers from tech giants such as Apple, Google, and Meta are quitting their jobs to come build new software businesses in the primary markets because they see the next generation of tech giants like Apple, Google, and Meta will not be built in the traditional economy using our current technologies, but they'll be built in the primary markets using on-chain technologies. Let's look at an example. Pendle. Pendle is a SaaS business built on-chain. And here's the value proposition of this business. Imagine you own a business that creates revenue through subscriptions. You're generating revenue, but you want to raise funds to grow your business faster. This is when you would go to Pendle, and just stick with me here as I explain this. Pendle will create two types of on-chain crypto assets for you, the business owner. The first is the principal asset, which gives you ownership over the business. And the second asset is the revenue asset, which gives you the rights to the revenue of the business. So you as the owner who wants the capital, you want to control the business, so you're going to keep the principal assets. But you can now sell some of the revenue earning assets to an investor so that you can get a bigger capital injection now from that investor. And this is a game changer. And here's how it works with some numbers just to explain this further for you. Let's say that business of yours, the total subscription revenue for the next 12 months is forecasted to be $1.2 million. What you can do is find an investor who is willing to buy the rights to that future revenue now for, say, $1 million. Using Pendle's SaaS, you create an automated piece of code directly on chain, and then you're going to get your assets split in two, and you're going to get $1 million cash injection to grow your business by selling the $1.2 million of future revenue to that investor. So he's going to make a $200,000 profit, and you get your capital now. This is a win-win for both parties. You're getting cash without selling ownership of your business or taking on debt. And the investor gets to profit in a low-risk way because he bought your future cash flows at a discount. After 12 months, the code of Pendle ceases to send cash flow to the investor, and you can go back to owning 100% of your business and 100% of your revenue again. Businesses and investors love this service that Pendle provides, and that's why Pendle generated $4 million in revenue in April alone. And because we were in the primary markets at our consultancy looking for high quality assets like Pendle, we understood this service and we saw the opportunity, and we invested back on March 8th, 2023 at 27 cents before Pendle, the asset, was even listed on secondary markets. By April 2024, Pendle had already reached $6.99, giving us a gain of 2,869%. That is a 28x return.
Okay, this asset right here, Pendle Finance, we did a report on this asset March 9th. We did a report on Pendle. We did a report because we absolutely love it. And let's take a look at where it was March 9th. Down here. Since our report, straight up. And that's because everything was going well for Pendle Finance. It just had great fundamentals. It makes money. It's just a good business. And our Yield School members, they were making some serious gains on our report because of that.
The price of Pendle has now corrected to $4.68, meaning if all you've done is just find Pendle in the primary markets and then you just forgot about it without having to time the top or stress about fluctuations, you'd still be sitting on a 17x gain right now. So that's the first benefit of the primary markets: high quality assets, early stage access. So that's the first benefit of the primary markets: high quality assets connected to on-chain businesses that you can access at an early stage. The second benefit to the primary markets is generating yield. You can access certain products in decentralized financial markets that pay passive income. A lot of people call this DeFi. DeFi is a subsection of the primary markets that allows you to access certain products. These are special crypto-only products you would never have access to with your traditional bank. The bank pays you maybe 4% interest on your dollars. Well, here's how much interest DeFi will pay you. It seems a bit crazy, right? Why would someone pay you that much? Well, here's one way of thinking about it. Think of this as a new kind of financial market. Instead of dealing with traditional banks and their old restricted methods of accessing markets, you're dealing with a new type of market directly. It's full of new on-chain businesses, software businesses, and services, all being built on-chain. So in short, this yield is coming from the businesses and services that exist on-chain. The interest you get is the interest that the businesses and the individuals in this market are paying you. And if this all sounds complex, just stick with me for 60 seconds as I explain this, and you'll see that it's not too complex. In traditional banking, you're going to put your money in a savings account and you're going to get a small interest rate on that. The bank takes your savings and loans that out to other companies at a much higher interest rate. The difference between the interest rate they charge versus the interest rate they're paying you is the profit for the bank. In DeFi, it's the exact same thing. You're putting your capital at risk and you get paid interest. Except here, there is no bank. The bank is replaced with on-chain technology known as smart contracts, and the types of products and services that you create with on-chain smart contracts far exceed what banks can create and offer you. Banks have less information, they take more middleman fees, and their databases are all separated by legacy technology that hasn't updated since quite literally the 1960s. With the level of creativity and sophistication being developed within on-chain markets right now, you can get some crazy high yields through some complex strategies. But you need to be careful when chasing higher yields like the 50,000, 40,000% examples I showed above. In fact, we don't really encourage new people to chase those big yield opportunities. Higher yield strategies take knowledge and expertise, and we can happily guide our clients through how these work. But if you're someone operating alone, you just make one mistake and someone can take all of your crypto, or even worse, you can just send it into the ether. For most, we just suggest easier options, like earning yield on stablecoins. Stablecoins are simple crypto assets that are pegged to a fiat currency, typically the US dollar. So USDC, for example, is a stablecoin pegged to the US dollar. 1 USDC equals 1 USD. So what you could do is convert some of your US dollars in your bank account into the stablecoin USDC, and rather than earn 3 to 4% in a normal savings account, you could earn 10%, 20%, 25% yield on your USD cash in DeFi. This is a pretty fantastic low-risk strategy to multiply your cash savings and create some passive income. I'm going to put some screenshots on the screen of when I was earning 25%, 30% interest on my cash in the bear market, last bear market. For us personally though, earning yield is our secondary strategy right now, at least in this phase of the market cycle. Rather than earning 10%, 20%, 30% gains through DeFi, we are positioning ourselves for 1000% gains by finding 10x assets in the primary markets early. But different stages of the cycle do require different strategies, and we do cater to them all. I'll make more videos in depth in each in the future, but for now though, I just wanted to give you an overview of what is possible.